Hello once again, and welcome to the 365 Retirement Podcast with Ryan Marston of Rubino and Liang Wealth Partners. Each week we sit down here and talk through some of the things you might be wondering about when it comes to your retirement planning. A lot of people are getting into this and they have brought the assets in. They've saved a lot of money, but then it's time to use that money. And how exactly do we use that? Ryan, how are you doing today?
I'm doing great, Randy. How about yourself?
Real good, real good. And, you know, as I sit down and think about things of what you and I can talk about, I take things from my own life, questions that I have, and then I look around as well. And a lot of people write into publications like Barron's and Market Watch, and they have questions. And they're a great source of material here. And I wanted to throw this one. This actually has to do with tax and estate planning. And this one was in Barron's. And there's the story of a man who has $3 million. He has one daughter, and he has kind of a charitable heart. So he decided he had his money in two different places. He had it in an IRA, and then he also had it in a brokerage account. So he gave the daughter the IRA, and he gave the Salvation Army the brokerage account. And it says that he made a pretty big tax mistake. What happened here?
Yeah, he kind of had that in reverse, or
he had it backwards. Okay,
he had it backwards, right? You know, and it's a mistake that only cost the daughter, right?
Okay.
And so what he could have, done in that situation is, instead of leaving the daughter the IRA, just leave her the brokerage account, leave the Salvation Army the IRA in that situation, and because he did that, what the consequences were of him doing that is, when the daughter inherits the IRA in that situation, she has to pay taxes based on her income level as she makes withdrawals, and she has to withdraw that over a 10-year period. So just say if she took out 10% of a non-growing figure, $150,000 a year, that gets added on her income taxes, along with any employment income, wages, salaries, etc. And now she has to pay taxes on that. If the daughter inherited the brokerage account, well, she gets all those assets at a stepped-up cost basis. If she liquidated and withdrew it, there's no taxes due at that point in time.
Wow.
And for the Salvation Army, whether they inherited the brokerage account or the IRA, they're not going to pay taxes in either situation because they're a charitable organization. So they get to inherit, they would get to take receipt of that IRA and not pay taxes. So, if he gave the IRA to the Salvation Army, the brokerage account to the daughter, there'd be no taxes due on either end, versus now the daughter has to pay taxes because she got the IRA and the Salvation Army got the brokerage account. A mistake that could have easily been avoided.
And this is one of those situations where it could easily been avoided if this person had a little bit of advice along the way and talked to somebody like you and go through it. There are estate planning attorneys, there are elder law attorneys, there are tax attorneys, and in the financial realm, we kind of need all that kind of advice, don't we? It's when you talk about retirement planning, it's not just investments, it's stuff like this.
It absolutely is. A lot of the times we'll lead with retirement to make sure that, people are set up for retirement. And then the step after that is estate planning and taking a look at your, if you have an estate plan and what your goals are and what your assets are and in what manner you want to leave to your heirs, and then taking a look at what different types of taxation on different accounts you have, and what might be the most advantageous method of how you leave assets to those said heirs. And if a charitable institution is involved, there's ways to take advantage of that and give them certain assets that might be taxable to your heirs and not them.
Yeah, I've heard this story more than once of, a parent is worried that they're going to go into a nursing home. So what they do is they take their house and they put it in their kid's name, thinking that that is going to make sure that the kid keeps the house and the nursing home doesn't get the house. And that doesn't necessarily work all the time, does it?
It doesn't. Under the similar situation, that brokerage account, right? If you do that, and then the kid goes to sell it, well, they're going to be paying taxes probably based on the parent's cost basis or a very discounted cost basis that they got it for. Versus if the heir or the kid inherits the house upon their passing, maybe through the use of a trust, right? And the trust could be protecting it at the same time from the nursing home. If done correctly and established within a time frame. And then when the kid inherits it in that scenario, they would get it at the stepped up cost basis of that date. And we've seen real estate prices surge. So, they would, if it happened on, July 1st, let's call it, and the kid would inherit the house and sold it on August 1st, well, they're probably not paying any tax, or minimal, or if any tax, because of, the basis would be, the value jumping potentially over a month versus maybe 10, 20, 30 years of time, right? So you're going to pay a lot less taxes. Again, done correctly, setting up a estate plan, there's a cost to it, but the cost could be a fraction of what the tax cost would be upon passing. And I think anyone would rather pay less tax, even upon passing, than more tax. So a very easily fixed situation remedy.
It is kind of interesting to me that, one of the main things that people will come to the retirement table with is, I've saved all this money, don't lose it. You got to protect my money. I don't want to be at risk in that market. But at the same time, then they won't have a tax plan or estate plan. And that's, again, ways to protect your money while you're here and while you're not.
Yeah, you don't want to take on everything at once, but there's different levels, right? Once you make sure you're set up for retirement, then you want to make sure your heirs are set up upon your passing, and you can get your assets to them as efficiently as possible. And that's why we have steps to what we do with here in our office. Make sure you're protected. Then your heirs beyond that, if that's a goal of yours, and make sure you do it in the best manner possible. And tax laws change frequently. Tax codes change frequently, a lot in just the last 5 to 10 years. So you want to make sure not only is your plan set up, but it changes when it needs to change with the codes constantly being changed.
Well, as you go toward retirement, you may have a lot of stuff locked down. You may be in great health. You may have saved well. You may have a lot of income. You've got a pension. You've done a great job there. But these are the kind of things that sometimes people don't think about, and you really do need to think about. And this all kind of comes out at that initial discovery meeting where you sit down with clients either by phone or in the office and find out what's going on in their life. And these things kind of get uncovered, don't they?
They do, yeah. When we sit, we will initially talk, and we'll try to prioritize the goals of the prospects or potential clients, and then try to make sure we come up with a plan that fits what they're trying to do. So it's not like a one size fits all, or everyone gets treated the same way in the same process. It's based on the goals and what the client's trying to do, and in setting things up and showing them that this is the most efficient or advantageous method of setting things up and making sure you're protected, your heirs are protected, and to the best of our ability, based on the assets they have at that point in time.
Protecting your money is job number one. Making income in retirement, of course, is a huge situation that everybody has to figure out. Let's get it all figured out for you. Give us a look on our website, which is 365retirement.com. That'll bring you to Rubino and Liang Wealth, their website. And up in the right-hand corner, it says Talk to an Advisor. If you click on that, you'll be kind of on your way. We'll walk you through the steps there. And we'll have, maybe just a Zoom meeting or a phone call and just talk through your concerns and see if, we're a good fit together, kind of kick the tires on everybody. And if we want to move forward and sit down and talk about your concerns about retirement, we would love to hear that story. Give us a look again on our website, 365retirement.com. We've got notes and things for you here as you just take a look down on our podcast. We thank you so much for watching, and we'll see you next time here on the 365 Retirement Podcast.